Welcome to Graphite Hub's interview series, a series dedicated to all things graphite. We're fortunate enough today to have Julian Babarczy, Non-Executive Director of Lincoln Minerals with us. Today we'll be chatting to Julian around the general graphite market. So welcome, Julian.
Hi, Harry. How are you?
Yeah, awesome. Glad to have you here. Cool.
Likewise.
So should we start off with graphite pricing? We've seen data coming out last week from Benchmark Minerals that shows the minus 100 mesh Chinese flake graphite prices in August have dropped to their lowest in over a decade. How do you think this ongoing decline in price is impacting the global graphite market, particularly for non-Chinese producers and developers?
Yeah, Harry, I guess it's fair to say that I think the graphite price weakness has surprised almost everyone to the extent that it has fallen much further. We saw graphite prices very low a number of years ago when all of your viewers would know that Syrah brought their Ballimer project on stream, and the price discovery there was much lower than what people expected. And partly to do with the volume they brought on. Then there was a period of the market accepting that supply, and then we actually saw a rally in graphite prices about 18 months ago, rallying from probably current levels around these levels up to about $800 a ton, which I think was the signal for most people that we were in for the start of the next bull run. And I think there was a lot of excitement, and graphite equities really got a head of steam up, and a lot of money was raised. But since then, it's been very disappointing with the pullback in prices. And I think there's a lot of factors, obviously, that go into that. One has been, I think, a general slowdown around the globe, the global recession that people think we're either in or about to have. But there's been a genuine slowdown. China's slowed their economy quite considerably as well, and that is a bit of an engine room for a lot of commodity demand. And I think the EV rollout has been probably slightly slower than what people expected as well. So what that has meant has been that the demand's been a bit slower. The supply's probably been able to keep up with the demand in the short term. And we've had a bit of general weakness in the economies around the world, particularly out of China, and the prices have come back. So it's been quite surprising for a lot of graphite companies. And I think really that means that supply is genuinely going to be constrained, or new supply. So if you believe the forecasters, and we definitely do at Lincoln, we're a graphite company, and we've done a lot of work, and we speak to potential off-takers. There's a growing concern over where the graphite will come from in a couple of years' time onwards. But the current prices are making development in new projects very, very challenging because I think unless you've got a very, very high-grade deposit that starts at surface, if you've got to do any sort of pre-strip or any capital expenditure that's more significant than the mine capital, then I think it's challenging at current prices to fund a project. And so what that means is there'll be less graphite around in a couple of years because the projects needed to fill supply then won't be around. And generally that means we're probably setting ourselves up for a price rise at some point in the future. There's an old sort of saying that the best cure for high prices is high prices. And what that means is high prices normally allow additional capacity to come on, and the market gets flooded with extra commodity units, and that leads to an oversupply, which drives the price lower. And the flip side's true when prices are low. Best cure for low prices is low prices. It means both new supply won't come on, and I think we're seeing that in the graphite space. And generally, it means that existing supply that's below the current cost gets shut in. We're seeing that in the lithium market, for example, at the moment, with a number of announcements around existing mines getting shuttered because they're not economic. So I think all that means that the graphite price is probably setting itself up for a rally at some point. We do need the EV demand to come through. It's probably another year away, but the market should start pricing that in ahead of time. And unless that happens, then we're probably setting ourselves up for a bit more of a super spike. So, we're cautiously optimistic on where we sit right now, notwithstanding, as you said at the start, we're at the low point in the commodity price cycle.
Yeah, no, it's definitely a tough environment to navigate, it's no doubt. Kind of staying on that path, in regards to synthetic graphite, we're kind of seeing this capture kind of a larger market share at the moment, just as it's becoming kind of more affordable. So I guess how can natural graphite producers, especially those outside of China, still remain competitive?
Yeah, look, there's an ongoing debate, I think, amongst all graphite investors as to what the ultimate switching capacity is between natural and synthetic. But my view, and that's based on interactions I've had with some of the world's largest battery manufacturers, is that the best batteries have a mix of both. So optimally, you want at least 40% natural and probably 60% synthetic, or closer to 50-50. And the important thing to understand is that they have, despite the fact they're both anode material, they have slightly different attributes in a battery. Because of the very regular and ordered way that synthetic graphite is made, you get very different properties. You get much better range, faster charging capacity, etc. But the natural gives a lot more power and response. So better batteries tend to have a bit more natural graphite. So I think what we've seen in recent times is with the prevalence of synthetic graphite, there's a lot of capacity put online in China over the last number of years ahead of what has been a battery boom. And that's meant that there's overcapacity. So there's a lot more of that around. So the prices come down. Similar to any market, there's more supply than demand. So the prices come down. And I think while we're in this period where there's a slower economic cycle and the EV demand slightly pushed out, we all think it's going to happen at some point, but I think that the big ramp is just pushed out a year or so. It just means that these units of synthetic graphite are more available and cheaper. So I think what we will see over time will be, as the market grows, you'll need to draw in more natural graphite. And what we'll have to see there is a rising price for natural graphite. Otherwise, mines simply won't get built. And so I think it's not an either or for synthetic. I think we're going through a mini cycle with regard to a transition over to synthetic away from natural at the margin. But as the overall market grows, I think both need to prosper for for the proper batteries to be built by the various battery manufacturers.
Exactly. And now, kind of shifting to the USA, we saw that the foreign entity of concern requirements were pushed earlier this year to 2027. And just for those that just aren't too familiar with this was the regulation that was intended to kind of limit the use of materials such as graphite from China in sectors such as electric vehicles. Um, so, Julian, how do you think this delay to 2027 affects the urgency of securing non-Chinese supply?
I think it's definitely fair to say that these sort of policies are driving people, towards non-China graphite, and that's, I think, what non-China markets are wanting. As we all know, graphite, both production of graphite and anode units, are dominated by China, as is all the refining capacity and those sort of things. So that supply chain concentration is seen as now risky in the current environment, and so these policies are about, I guess, stimulating additional supply chains outside of China. So at the moment, the easy purchase selection for anyone in that anode supply chain is to go to China, because you know you can get it. Although, having said that, China has put export restrictions on graphite and some anode materials, and so it has got harder to source that. But at the end of the day, while you can still source it, people are tending to go to where the cheap option is. But it hasn't gone away, and I think all we've seen is a stay of execution, if you like, for when these restrictions or requirements come in. And so I think what you've just seen is now a period of time for the supply chains outside of China to get their house in order, for want of a better term, and to put offtakes in place with non-China supply. But I think what you do tend to see during these supply chains is a level of complacency at times, that a lot of the supply chains expect the market just to sort itself out and for those units to magically appear when they're needed. But I think, and in my context of my Lincoln involvement, we do talk to some buyers of graphite material, etc. We're aware that there's shortages building in their supply chains in the next 18 months to 2 years. But I think what we need to see is some leadership from those non-China purchasers, where they look to write contracts that are at higher levels than the current price, because that's needed to drag the units through the chain. And there's a significant lag, as your viewers probably know. It's one thing to find a deposit. It's another thing then to go through the various studies of scoping study to pre-feasibility study to feasibility study, then do a financial investment decision. Then you've got to arrange debt funding for it. Then you've got to build the mine, and then you've got to ramp the mine up. And that can be anywhere from 3 to 8 years in reality, or longer. And so the view is that while there's been a stay of execution and these regulations, people have got more time, they need to be making decisions now. Otherwise, the graphite units that they want simply won't be available. So I guess it's a bit of a call to action to the purchasers outside of China, that you probably need to be stimulating that demand now, either through providing upside pricing opportunities to these companies so that they can fund the projects and get them up and running. So it definitely hasn't gone away, but I think it did take the wind out of the sales of the sector from both a sentiment and a pricing perspective. But I think that's transitory, and we do expect these things to come in, and they're expected to drive higher prices.
Yeah. Yeah, no, agreed. And kind of given that the US election is fast approaching, we're seeing it every day at the moment, what's happening in the US. We kind of see that the Democrats are committed to kind of maintaining the Inflation Reduction Act, which, boosts clean energy and the EV investments, which in turn does drive graphite demand. Meanwhile, kind of on the other hand, we're seeing Trump, he would like to eliminate the Inflation Reduction Act, but then on the other hand, would like to impose quite significant tariffs on China, um, which would clearly benefit non-Chinese graphite producers and developers. So I guess how do you think that these two kind of contrasting approaches shape the future of the graphite market? And I guess how should companies prepare for either scenario?
Yeah, look, it's a good question, Harry, but I'm not going to even attempt to try and predict the outcome of the US election. I think that's both fraught with danger, and I'll probably
Yeah.
risk offending half of the viewers because it's a very polarizing event. But the reality is that their policies are somewhat different. I think probably the easiest thing for the world would be Harris win because it's probably more of the same, and that's what people are used to.
Yeah.
If a Trump win happens, there's probably an adjustment that needs to go to match his policies, which aren't exactly mandated. So it's hard to know exactly what he does. And so I think you can probably, tear yourself into pieces trying to work out what might happen. At the end of the day, I think the market will adjust to whatever, whoever does win the election, whatever the policies are. And I think because at the end of the day, it's going to come back to overall market fundamentals. At the margin, their policies will make a difference. Tariffs will push the cost curve up and will probably lead to higher prices. But at the end of the day, if we believe that you need, you're listening to people like Benchmark Minerals, we need 30 to 40 new graphite mines inside the next decade. So whether Harris wins or Trump wins, I don't think that's going to be the key driver. The key driver is, are batteries going to become ubiquitous in our vehicles? If you believe that's going to happen, there's a lot of demand coming, no matter who wins the election, and that's going to drive prices more than anything else. So ultimately, though, I think there's things that the US will have to do for all their critical minerals, and graphite is one of those, to stimulate non-China supply chains. And so anyone with a project outside of China, which is most of the ones that your viewers would track, should be positively benefiting from either wins. But ultimately, as I said, I think it'll be, if you believe the demand forecast, which we definitely do. Obviously, the timing can sometimes be off, but if you believe more units are needed, the price has to go up. Otherwise, the units won't appear in the supply chain. So that's really where we're structuring the business that we're involved in, and I would expect most of your viewers would be the same.
Yeah. No, it's going to be quite a fascinating next month and a half to see what the
That's
outcome
right.
is. Well,
Yeah.
I guess, yeah, thanks, Julian, for sharing your insights. Yeah, appreciate your time, and we look forward to having you on here again in the future.
Yeah, thanks a lot, Harry. Appreciate it, and happy to pop back and share any of my insights if they're of value.
Awesome. And just one last thing for those Lincoln investors, we'll be catching up with Jonathan once the PFS is released in October. So we look forward to catching up with him then. But yeah, so this concludes this episode of Graphite Hub's interview series. We'll see you next time.